everyone, and happy return to all of it. The EV market is still suffering from supply chain issues and inflation, but Tesla is still making smart decisions to stay afloat. That's what's been going on with the American automaker lately, yet despite the difficulties, sales and stock price growth for the business are still rising. Despite the fact that most investors would believe that this is the ideal opportunity to buy more Tesla stock, well-known TV commentator Jim Cramer disagrees. Jim Cramer believes that now might not be the best moment to increase shares. In fact, he has issued a warning to Tesla shareholders to sell their stock before August 30th. Cramer has said this, but why? Well, before we begin, let's find out. Remember to subscribe, like, and set on channel notifications if you enjoy this kind of content so you never miss anything that happens in Ted's world. American TV broadcaster and investor Jim Cramer is well known for his Mad Money program, which has been shown on CNBC since 2015. While Jim isn't afraid to share his thoughts on various stocks, including Tesla shares, with the large audience he's amassed over the years, not all of his stock recommendations on the show resulted in listeners investing large sums of money. In actuality, Cramer was co-founder and manager of the multimillion-dollar Cramer-Berkowitz hedge fund, in addition to being the creator of ThisStreet.com, a website that provides financial advice. In addition, he is a well-known writer who writes about money stocks and how to profit from knowledge. Although Jim Cramer is a huge stock market enthusiast and undoubtedly a Tesla fanatic, his latest warning about the company has caused some agitation among investors who follow him and have seen him develop into a fairly strong Tesla bull. Rather than holding their Tesla stock for the long haul, Cramer advises investors to start thinking about selling their shares. Though it's unknown what he thinks about Tesla, based on his prior remarks, one may assume that Cramer believes the worst is yet to come for the electric vehicle manufacturer. Let's investigate why Cramer recently shared his renewed optimism for Ford in an interview. This occurred after the business revealed plans to almost increase the future electric F-150 pickup truck's yearly production capacity to 150,000 units by the middle of 2023. Cramer claims that Ford is presently producing batteries and inverters and anticipates producing 200,000 battery-powered vehicles by 2020. Additionally, he stated that although Tesla is growing its factories, it is going through severe financial difficulties, while Ford has large car production facilities in place that have been there for longer than Tesla's shares of Cramer's alleged new fan company. Ford has also outperformed Tesla in the past when it comes to movies and pickup trucks. Ford reached a new 52-week high earlier this year, rising from about 10 to over 24. Kirby declared that Ford's potential was limitless for this year and advised the audience to check out Ford's all-electric F-100 Lightning truck, which is an electric take on the classic American pickup truck. In related news, Cramer claimed that Elon Musk's Cybertron was his first failure and attacked Tesla. Considering that Cramer has always been a major supporter of Tesla's ambitious endeavors, this is an odd comment. Furthermore, there is a lot of excitement and pre-sale orders surrounding Tesla's Cybertruck, even though it hasn't been released yet. This is something that a Tesla ball should be long-term thrilled about. However, Cramer wasn't excited about this, so what might have caused this? Tesla has been facing difficulties related to inflation. The EV manufacturer just disclosed a lower-than-expected decline in quarterly earnings, which the CEO of Tesla attributes to a run of price hikes for the company's vehicles. Tesla's price increase, according to Musk, is embarrassingly high, and he said that if appropriate action isn't taken, this might negatively impact demand for the company's automobiles. According to Musk, a business cannot raise prices to an unreasonably high point because doing so crosses the affordability threshold and may result in a decline in demand. Tesla has increased its prices multiple times in the past year. The Model Y long-range version now costs $65,990, which is more than 30% more than it did at the beginning of 2021. Musk continued, saying that in addition to the numerous production and supply chain disruptions Tesla is experiencing, the worldwide market is also experiencing inflation. The CEO stated that while he had anticipated that most commodity costs would stabilize and that inflation would begin to decline by year's end, allowing Tesla to slash pricing, even somewhat, things don't appear to be moving in that way. Similar to Cramer, this has been a big worry for Tesla supporters, especially since Musk revealed that he had a really negative feeling about the economy. Similarly, Morgan Stanley's analysis indicates that production at Tesla's gigafactories hasn't really been as projected. The difficulties in raising production are starting to affect Tesla's revenues in the short term, according to Elon Musk. No doubt, Tesla is constantly surprising the automotive industry with amazing new innovations and production targets, but on many occasions it has also been reported that it is unable to meet deadlines and release dates due to several market challenges, especially with regard to supply. This has been discouraging for Tesla fans who constantly look forward to its projects. However, the CEO claims that new factories in Berlin and Texas are expected to produce 5,000 cars a week by the end of the year, and Tesla is still pushing to reach 50 growth in deliveries this year. The company revealed that this target has grown more and more difficult to achieve. This is also one of the reasons, in Cramer's opinion, that Ford is steadily replacing Tesla in the market, and if he is correct, investors might not want to sell their shares before August 30. Speaking at a conference recently, Elon Musk revealed that the company's supply chain has been a nightmare. The company's executives have also acknowledged some ongoing tightness in the company's supply of older generation microchips. Ford, like most TV companies, is currently facing supply chain challenges. Over the April through June period of this year, Tesla's vehicle deliveries decreased by 18% for a number of reasons. In the same way, Tesla has not been able to increase production at its new factories in Austin, Texas, and near Berlin as most Cordelia claimed it would. But the projects have been receiving huge investments with little production results, so it's fair to say that Cramer's concerns at this point are quite valid. One example of this is the recent shutdown of the company's Shanghai factory, which affected over 40 sales quarters of the factory. Additionally, there's a lot of competition in the EV market, and numerous businesses are always vying to overtake Tesla. It's concerning that Tesla lost ground in the US while Kia and Ford Motor gained sizable market shares. This could be a port of huge things to come for Tesla. Nonetheless, it is not unexpected that Tesla's finances are progressively being impacted by these supply chain issues. The business's overall sales decreased from $18.76 billion to $16.93 billion, maybe indicating a decline. The company's financial trend, and most likely the selling of Tesla's controlling interest in Bitcoin holdings, is another significant development that may indicate the company is having financial troubles. Roughly 75% of Tesla's Bitcoin acquisitions were exchanged for fiat money. Given the status of the cryptocurrency market right now, it is clear that the corporation purchased at a discount given the market's downturn. Musk claims that the transaction was done to boost liquidity because it is unclear when the China lockout will be lifted. Therefore, is Cramer's prediction that investors will sell their stock correct? The stock market is unpredictable, so it's hard to say for sure. Yet the company's most recent quarterly results could lead one to believe differently. As per the analysis provided by Laura Hoy, an equities analyst at Hargreaves, Tesla's issues are primarily transient, and the company's earnings are expected to rise in the upcoming months. Based on the financial figures and shareholder letter the electric vehicle firm provided for the second quarter of 2022, one could conclude that Tesla exceeded revenue and earnings projections. The corporation recorded revenues of $16.34 billion and earnings per share $2.27 despite a challenging quarter. Additionally, throughout the quarter, it improved its cash position by $0.8 billion to $18.3 billion, which led to a 4% gain in shares prices. Tesla says that it continued to make significant progress across the business during the second quarter of the year, despite many challenges. Although this is lower than Tesla's profit in the first quarter of the year, approximately one-third, it is an achievement in itself. Tesla is a fast-growing company, and from the records it's executed several groundbreaking projects in the past. The EV companies dominated the industry for years, topping most of its competitors multiple times in the charts. It's not surprising then that the company is affected by market challenges, as no company is immune to this. So judging by Tesla's long-term valuation based on this, well, it may not be ideal. However, this is not to say that Jim Cramer is wrong about his opinion on Tesla. His statements are probably based on statistics and previous economic cycles, seeing that he's been in the business a long time. But going by the performance history of Tesla, it's safe to say that the company is always on top of its affairs and constantly seeks ways to overcome its obstacles. So it is most likely that this will not be any different, and Tesla's stock may still go higher in number. But then again, the stock market is always volatile, so buying or selling any stock should be based on your own personal conviction. What do you think? Should investors sell or hold on to their shares? Let us know down below. And while he's still here, go ahead and click on one of these two videos on your screen. See you there.